Hello friends, today's topic, these companies are very famous but poor stock market performance. My name is Dr. Bharath. The purpose of the video is service to society. Many investors believe in an approach where they feel that the famous brands or companies will surely perform well in the stock markets. No doubt that for a company to be successful in its business, a good brand name is important. However, just having a good brand name or being famous does not result in sure success in the stock markets. We are presenting various examples of famous companies which have done relatively poorly in the stock markets in spite of having famous brands. After observing the examples, you will be encouraged to do more complete study before investing in stock markets and not by just seeing the famous name of the company. Number one is Kingfisher Airlines. It was started by the very successful UB group of Vijay Mallya. It created a very strong brand name. However, financially it was a failure right from the beginning and finally could not be revived in spite of best efforts of the management. Vijay Mallya had to flee from India due to huge outstanding loans to banks. The shareholders who invested in the company were hopeful of a revival in the last few weeks of the company operating. Finally, the shareholders lost their entire investment in Kingfisher Airlines and were left disappointed. Second company, Paytm. Paytm is synonymous with instant payments. Most of the shops, businesses accept payment through Paytm. Similarly, people use Paytm to transfer money to their friends and family. Although its brand is very well known, it has so far not translated to positive returns in the stock markets. Its financials were weak but generally improving. However, it faces tough competition in its payments business from PhonePe and Google Pay. Also, its financial business has tough competition from Jio Financial Services and Bajaj Finance. Since listing in November 2021, Paytm shares has never crossed its IPO issue price of rupees 2150. It's currently trading around 723, which is still 66% below its IPO price. Only time will tell if Paytm shares will give good returns in the long term. As of now, after more than 1.5 years of listing, it is still struggling in its business. Now the third company, famous but not having good performance, is LIC. LIC has been the market leader in the life insurance sector in India since it was started in 1956. Until the year 2000, LIC was the only insurance company in India. In 2000, the government allowed private companies to offer insurance services. This created heavy competition in the sector. LIC has been gradually losing market share every year. Currently, LIC's market share is around 63% in terms of the new business premiums collected. It was listed in May 2022 with great hype since it was the largest IPO in history in India. But since then, LIC shares have not been able to perform well. It is still trading 37% below issue price given in the IPO. Although it has been only 1 year since LIC shares listing and there is plenty of scope for revival of the shares, it will not be easy for LIC to improve its market share. This could make it difficult for its shares to give good returns even if it is able to recover in the near future. Also, government will have to sell more stake in LIC to comply with the minimum public shareholding rules, which will provide more supply of shares and maintain the downward pressure on the share price. Finally, at the end of the video, here is a question. Have you invested in any company's share by just seeing the famous brand and then has been disappointed with the performance? If yes, type the name of the company, otherwise type no. If you are not the member of Dr. Bharat Chandra, Rohan Chandra channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The end. Thank you for watching. Bye bye. All the best.